What is going on, everyone? Welcome back. In this video, I'm going to be performing a top-down multi-time frame analysis on Ethereum because I do see potential trading opportunities lining up for the current week. So let's get straight into it. If you recall, when the market was here previously, I updated you guys explaining all the reasons why we expected the market to target this low and push to the downside. And as you can see, that's exactly what's happened. So now if we go to the monthly time frame and just recap the overall trajectory from the monthly perspective, what we can identify is we had this monthly accumulation. Then price pushed to the upside, took out this high, and it filled in this monthly imbalance exactly here. Since filling in the FEG, we've started to push to the downside, and now I expect the market to target these lows. So from a monthly perspective, I am bearish. If we drop down to the weekly time frame, what we can identify from the weekly perspective is a very similar story. You can see how price swept the buy side liquidity here with this move to the upside. This move to the upside was a trap. We got this bullish engulfing, then the railroad bearish engulfing back down. Ever since, the market has been bearish. And like I said, I am expecting the market now to target these lows. So if we drop down, one important thing that we can obviously recognize here from a weekly perspective is the previous weekly candle. Now, looking at the previous weekly candle, we've closed bearish with a wick to fill. Now, the current weekly candle is opened bullish. There is a gap here, okay? From this wick high, we could easily close this gap and then make the move to the downside and fill in this wick. If we drop down to the daily time frame, that fits very nicely with my overall projection because we have a bearish impulse from a daily perspective from point A to point B. Now, this is a bearish impulse because the market has broken below this ascending trend line. We have one touch, two touch, three touch. We've also broken below these lows. So as I said, the market has made a daily bearish impulsive move, and now we've started to make the retracement move. Now, we want to be waiting for a retracement move to hit a significant level of confluence so we can then reposition ourselves short. Where is the significant level of confluence from a daily perspective? The first area which sticks out to me is this imbalance. Okay, from this wick low to this wick high, the market has created an area of imbalance, an area of fair value during this impulsive move to the downside. Not only that, but we have supply, which created that break of structure right here. Okay, so now we're layering on confluences, okay, on the chart. So already, all inside of this zone, we have confluence. Now, if we take our Fibonacci from the high to the low of the bearish impulse, we can see that we also have the 0.618, which lines up exactly with this level of supply and with this area of fair value. So basically, what I'm looking for here, I'm waiting for price to come into our area of interest. And we've got this daily impulse, correction, continuation pattern. All inside of this zone right here is where we will be monitoring with students on the lower time frames, waiting for the 4-hour market to switch from a bullish corrective trend to a 4-hour bearish trend. That is when we have high probabilities because the monthly, weekly, daily, and 4-hour time frames at that particular time will all be aligning for sure. So we are going to be waiting all inside of this area for one of our valid entry confirmations inside of this zone to capitalize on the move to the downside. Now, where is our potential downside target? We will simply wait for a corrective move to finish. Let's say the corrective move finishes here. We will take our fib from the high to the low of the correction, and our downside target will be the Fibonacci extension minus 0.272, okay, which you can see is below the lows, which is where the liquidity resides. So let's sit and wait patiently for price to reach this level. Let's not rush into any trades. We have to wait for that high to be taken out. Okay, if we go to the 4-hour time frame, you can see there is liquidity above that high, buy side liquidity above that high. We need to wait for that to be taken out, then we can monitor price action all inside of this area for potential continuations to the downside.